Good afternoon, everybody, and welcome to this week's long-form episode on Mining Stock Daily, getting it to you a little bit earlier in preparation for the 4th of July holiday. U.S. markets obviously being closed in the afternoon of today, Thursday the 3rd, and throughout tomorrow. We'll be back Monday, actually. We'll be reporting from the Rick Rule Investment Symposium in Florida next week. So we're getting this one in for you, and this is going to be a fun conversation. We're going to have a little bit of fun in this episode because actually there's a gentleman that I worked pretty closely with for a couple of years back in 2022, the end of 2022. He decided to leave the junior mining market, gone, and he was really well known. He had enough, but I just got word this week that he is back, and so we're going to welcome this gentleman back. I'm going to leave it a surprise to come back here when we come back here into the discussion. We're going to leave a surprise of who that is, but we're going to have a lot of fun. You probably already know who this person might be, but great conversation with my guest this week, and we're just going to break it all down, why he's coming back, and obviously there'll be some banter involved. Special thank you to Revival Gold, Integra Resources, Visa Silver, and Equinox Gold for the continued support of the podcast. And as always, please leave a like, and subscribe if you haven't, and share this episode with others. And most importantly, have a wonderful, wonderful, safe holiday weekend. All right, let's jump into it. Enjoy this week's long form episode. Hey everybody, welcome into this week's long form episode. We usually air these on early Friday mornings, but with the holiday tomorrow, 4th of July, Independence Day here in the United States, we're going to put this out here Thursday afternoon. The market has closed, and we've seen all-time highs in the equity markets. Gold's hanging in there. Copper's also hanging in there. Silver actually had a little bit of a bounce today as well. But we're going to talk markets a little bit more with somebody. He's a long-lost friend, guys. He's like one of the OGs of independent newsletter writing in the junior mining space. It's somebody I've known well over the years. He helped me cut my teeth a little bit. We worked together for a number of years in another content podcast for another media company, and we parted ways. And then he kind of went dark. Last I heard, he was like managing 2 different homesteads, one in New Mexico, one in Missouri. I have no idea where he went after that. He called it a retirement back in December of 2022, and then he was gone with the wind. But he's back. My friend, the mercenary geologist himself, Mr. Mickey Fulp. And I am so excited. I am so excited to have Mickey here on this podcast once again. So good afternoon, Mickey. Good to see you.
Well, thanks for the kind words. And likewise, it's good to see your smiling face again. It's been a while. And you'll notice I've got the red, white, and blue theme going as a
That's right.
Good old boy, patriotic American libertarian hillbilly redneck. I thought we should celebrate the 249th anniversary of our rebellion in basically a short 12 hours.
Yeah, absolutely. You got big plans for the 4th?
I'm gonna look at the fireworks from the top of the hill here. I don't have to drive 3 miles to the park because we're the second highest elevation in the town I live in and in Missouri. And the highest elevation is where the fireworks are at the park. So that's about it.
All right. Very good. Well, listen, hey, so we're going to break this down. You're coming out of retirement. In this letter that you had sent me, you called it a sabbatical. I'm going to call it BS because I think you called it a retirement and just
nah. I called it a semi-retirement.
A semi-retirement. Okay.
I never officially retired, and I always reserved the right to come back if you read my last newsletter before yesterday's, which was and this New Year's Eve of 2023.
2022. That was 2022.
Okay. Yeah. So 2.5 years ago, I said, there's nothing good in this business, so I'm stepping away for a while.
Yeah. So what does a mercenary do in semi-retirement, Mickey?
Lots of outdoor stuff, lots of fishing. Got some fishing in yesterday. And as you alluded to, I had previously established another household, and it just so happened to be where I spent, where I grew up in the Ozarks of Missouri. And I took over the family homestead and been working on that. And I still live part-time on the farm in New Mexico and part-time in Vancouver. So, uh, you know, how can you be two places at once when you're not anywhere at all?
Yeah, that's true. All right, listen, I told you we are going to have some fun. I promise we're going to talk mining exploration markets here in a little bit, but we are going to have some fun with the holiday weekend. So I thought with you coming out of retirement,
Okay.
it's comeback time, right? And so let's talk about some of the best, biggest comebacks of people coming out of retirement and showing the
Okay.
world what they have. Okay, I got a couple. I got four for you.
Really?
Michael Phelps won 23 gold medals, announced his retirement following the 2012 London Olympics. Came back 2 years later, won more gold in 2016 Rio Olympics. Shockingly enough,
That's a good one.
he does not hold a single world record anymore. Isn't that crazy? All right, this one you like. I know you're a baseball fan. Roger Clemens retired at the age of 41 in 2003 after winning the Cy Young. Came back a year later, won his seventh Cy Young. That one.
Steroid fueled.
All right, I know you're a hockey guy. Yeah, you're not wrong
Yeah.
about that. Mario Lemieux had
Ah,
health
yeah.
problem, battling cancer. He twice retired, only to resume more a great career with the Penguins. Um, Mario Lemieux, obviously better, and obviously we cannot forget probably, arguably one of the best, greatest athletes of all time, Michael Jordan. Right? Retires from the
True.
Bulls after winning three, goes and plays a little stint of baseball in the minors and the majors with the White Sox organization, comes back to the Bulls, wins another three NBA championships. So the pressure's on, Mickey. You know,
Well, so you brought up Mario Lemieux, and I hadn't thought about him, but how about Jaromir Jagr's retirement and comeback too? That was pretty monumental. But there's one thing. So we've collectively named five here,
yep.
but is there any better comeback from retirement, although it was forced, than Trump 2024?
But did he retire?
Politician,
He didn't
or he wasn't
retire
a,
though.
and he's a pretty good golfer too. So that, the sports angle can come in on that.
There you go. I don't think he actually retired though. I think he went straight back into
I
planning
told
the
you it
next
was a
election.
forced retirement.
There you go. All right. Hey, okay, let's break this down. Let's get back to you where you're at and why you're kind of jumping back into this space, Mickey. Um, in this letter that you had sent out, you had talked about, being a part of this industry, this sector, and seeing a number of different cycles. In fact, in that letter you published back in 2022, December 2022, you said, I had seen this show before. 1996, 2007, 2010, 2016. What was that
2000
say?
plus 2020.
Plus 2020. So talk about those cycles. What were we seeing in 2022 that made you take a step back and walk away for the moment?
13-year bear market with a couple of blips, which we mentioned, 2016 and 2020, when the price of gold went up and went back down not too long after. So it got to the point, and it's really a lot to do with, I think, the bad business model of the Toronto Venture Exchange, which is still bad business model. It's a negative sum game. It always has been. And the zombie miners came to the forefront. They still exist. So gold went down after that run up post or during the pandemic. And all these companies did was raise money at very diluted prices. Some financing as low as a penny or a penny and a half. Then they roll back and try to start over. And they're zombie miners. They exist to mine the stock market. And in a lot of ways that hasn't changed, but the comeback, if it pans out the way I'm hoping it will be, will do, is driven once again by the price of gold.
Yeah. The gold's going to be that tide that lifts all boats, you believe?
It's not going to lift all boats. This is what's different, in my opinion, from previous run-ups is the price of price of gold, which really fueled all the previous run-ups, or the collapse of financial markets fueled the junior collapse. I don't think it's not going to be a sector-wide run up. If it gets to be a sector-wide run up, it means it's frothy. It means that companies are raising money on the general irrational exuberance in the market. And that's the time to depart, sell out. Very famous entrepreneur, speculator, stock player of the early to mid 20th century, one of the most successful, Barney Baruch. Coincidentally, he made his fortune playing stocks in the early gold fields of Ontario and BC. He said, I made my money by selling too soon. So we should always remember that when the market starts looking like it's floating all boats, it's time to exit. Take your profits and go sit on the sidelines.
Yeah.
And that's what I did in 2016 and 2020. It took me 3 cycles to learn, I guess, because I hung on too long. And certainly in 96, 1996 or 97 really is when the collapse hit. That was fueled by BRICS. I didn't even know what a rollback was. Although I've been playing junior stocks for 5 years, there have been no rollbacks. And then 2011, it was a collapse really led by rare earth stocks. And 2007, of course, the 2008 global economic crisis.
Right. There's always lessons made along the way. And, let's take a look back at Mercenary Geologist in your newsletter. I mean, you are one of the long-standing independent newsletter writers in this sector. Incredible history.
Means I'm getting really old.
Well, you said it. I didn't. I was trying to be polite here, Mickey. But I'm sure the archives are just like filled. If you could go back and you probably do from once in a while, go back and read what you wrote years ago and just maybe see how naive you might have been or how off or how right you were. But talk about the beginning of Mercenary Geologist and like really what you want to do with this in this cycle now that you have got your pep back in your step.
About in 2007, when I was still a consulting field geologist, I had a job in the Sierra Madre of Mexico, reconnaissance job. It's the steepest ass tropical thorn forest that you can ever work. It's impossible country. And I realized that I was kind of getting too old to want to do that sort of work anymore. So I put the word on the street in January of 2007 that I was looking to become an analyst because I wanted to travel the world and see all these mining and exploration projects. And in March of 2007 at PDAC, I was hired on the spot by Jay Taylor, who is a much longer lived newsletter writer than I am. He's got at least 10 years on me in terms of writing a newsletter. Within a month of basically writing on behalf of Jay's newsletter, he told me point blank, within a year, you're going to write your own newsletter. And I said, I'll never write a newsletter. I'm not disciplined enough, yada, yada, yada. In 11 months, I was writing a newsletter. The term mercenary geologist came about in October of 2007. Before I launched the newsletter, I was at a conference in Chicago, and I got up and introduced myself before a speech. I'm a mining analyst and a mercenary geologist, and I got a bunch of chuckles in the audience, and I go, well, this is the name, this is my moniker, and I went with it, and we launched the newsletter in April of 2008.
Yeah.
During the beginnings of the global economic crisis, and there was a reason to do that, in the fact that all the current newsletter writers, the legacy guys, were just getting lots of bad publicity because they made all these bad picks in pre-pandemic when the wave in the Toronto Venture Exchange was floating all boats. So came in at the bottom, and what a great time to start a newsletter.
Yeah, it was like a 3-year run there, wasn't it? With the big commodity
Now,
boom.
basically, yeah, 3-year run, and till it's the high in the Venture Exchange, not the all-time high, that was in 2007, but the second all-time high a few years later was right a day before PDAC in 2011. The old PDAC curse.
That's right.
It is convinced, and there's reason for that. People run up stocks with news and exuberant buying before PDAC, and then it goes down.
Well, I'll be honest with you, we've missed you at PDAC. I always kind of wonder if I'm going to turn a corner at the exhibit hall and run into you, Mickey, or even at the
I think I'm
VRIC.
done.
Are you
done
done?
with PDAC, I think. They used to basically make it worth my while to go there and speak at the newsletter writer conference. They give you a free all sessions pass and et cetera. And then the pandemic hit, and I did one remote, and then they wanted me to pay money to go and speak. And it's a $3,000 US out of pocket gig, and to go shiver in the cold and slosh around in the snow, and
You had mentioned kind of the fall winter of 2020, and that's when you exited a lot of your positions, and I think of that time fondly myself, because not having the experience, but now kind of seeing that from the excess of capital coming into this sector. I mean, I remember in August of 2020, I mean, I was getting new company deals on my desk left and right. Financing window was wide open, a lot of money flowing into. I mean, I was, regrettably one of the people feeding into the frenzy. I was doing some of these IPOs rounds for companies that no longer exist or are now doing something different, and maybe they're lucky enough to even still be open. Like, I remember that, and so now seeing, like, living through that and being like, boy, I should have been more open to realizing the sentiment top here, and not feeding into that and decide selling positions. I know that. Yeah, I know that now, and part of it is because I learned from you.
Well,
So,
and so if you remember, we were doing our weekly podcast then for another
fondly.
media outlet, and I was telling you what I was doing, and I actually started selling in May of 2020. So I kind of saw it very early on, where every private placement was being oversubscribed at high prices. And in retrospect, there were $3 billion raised in this sector, basically from May till October, more or less, of 2020, coming or after the gold hit a multi-year bottom during the pandemic, as in March or April, as all commodities did. So I kind of saw it coming, because it looked like 2016 to me, and it was. And I probably took half my money out of the market, and did not go back in. And what happened was, by the time those private placements became free trading in October, do the math, just say really started to hit a frenzy in early June. So those would have been free trading in early October. And so that $3 billion, which was raised mainly pros, I'm a pro at this. You're a pro at this. We're not amateurs. And that was our money that fueled it. And then came the journalist American money. By the time those private placements became free trading from October to February, price of gold had gone way down. There was no market. Even if the price, I could counter that and say, well, even if there was a market, or if the price of gold went down, half the people would be selling their break-even stocks or their stocks at a profit just to play the warrants. So, by the time they became free trading, there were lots of sellers and no buyers. And we saw that movie before.
So maybe, Mike, I wanted to ask, why now, but I think it's best to kind of partner with that. What are you seeing in the cycle now, currently, with the explorers and the venture exchange, that makes you want to come back? What are you seeing now? Do you have FOMO here, Mickey? I mean, we've had a pretty good run up, in the last, I'd say,
Well,
12
yeah.
months.
So let's just, yeah, it has been a pretty good run up. The Toronto Venture Exchange is up probably 25%. That's a guess. I could look it up in about 5 seconds here, but that's my guess this year. But look at the level. It's 750 today, more or less. And look at the historic level of the Toronto Venture Exchange Index. It's a lot higher than that. I don't know. The mean and median, I guess, is 1,200, maybe 12 to 1,400, maybe. So, yeah, it's been a run up in specific stocks driven by the price of gold and somewhat by the price of copper, but it's not sector wide by any stretch of the imagination. And part of it, the other reason for the comeback is we're in a 13-year, we've been in a 13-year bear market for resource stocks, with two exceptions, about 6 months in 2016 and about 6 months in 2020. So, price of gold's up 40% since the end of 2023. So, driven by the price of gold, as always. It's always been driven by the price of gold, the venture exchange, and the Vancouver Stock Exchange before that, long before you were in the business.
Yeah, that's true. Obviously, you mentioned, not everybody has been getting traction here. It's specifically down the chain, the mining, the mine life, the mining life, from exploration, discovery to mining. But obviously, the producers are doing pretty well. Even some of those not great, what were terrible gold assets production with high operating costs are
Yeah,
making
with
money now.
so you look at their profit, their revenue statement, you go, wow. And then you look at their profit statement, you go, oh no, not again.
Yeah.
Because they're, and a lot of that's inflation, and that's what happened in previous run-ups of the price of gold. The price of energy and the price of labor have exceeded the run-up in the price of gold, and that's common. So their costs are up higher than the price of gold has gone generally. So
Yeah. So who has been kind of the big surprise winner in your book with the higher price of gold? Obviously, the the best gold miners, the best producers, the lowest costs are just raking in cash right now. But beyond that, like, who's been a surprise winner in your book that you don't think?
I'll be honest with you, in my semi-retirement, I kind of stepped away from it. So I have never bought producers individually.
Right.
And we've talked about this. I own two mutual funds of gold focused or precious metal focused mutual funds. So I play a basket, and those two baskets have certainly done well in my IRA. And I look at the quarterly statements, and I don't really think about it except how am I going to get this money out now that I'm getting older, when the U.S. government is going to force me to take money out of my IRA every year. How am I going to do that without incurring tax burdens? And there's ways to do that.
So where is the opportunity? Where do you see the opportunities here in this sector right now?
Well, I think it's going to be a very small group of the best explorers. I don't think that it's going to be restricted to startup juniors, advanced exploration plays, developers, or big or small producers. I think specific stocks in all those sectors are likely to do well. But you go back to the old criteria. You need a tight share structure, a committed, invested management with lots of their own money in the project, participating in private placements, good projects in stable geopolitical jurisdictions. That's an increasing concern, less concern now than it was 6 months ago when Biden was still president, because Trump is going to approve projects, or is in the process, Trump admin, of approving projects that were arguably illegally stopped by the previous administration in the U.S. But Canada's gone to pot, both literally and figuratively. So I won't touch Canada. But anyway, I digress. And finally, a cash position or the ability to raise funds without severe dilution, so they can not dilute their stock so much, and they still become relevant because the real on a real exploration play or development play or a mining project, or let's cut out the mining, let's go with the first two. The market cap is what drives, that's the metric you got to pay attention to. And if they've got 499 million shares outstanding, which I reviewed a company a couple of weeks ago, had, I think, 459,000 fully diluted shares. What's the upside on that? That's playing the Australian game, and I like to refer to that as Oz disease, Oz disease, too many shares out. So, over in Australia, they play those stocks between 6 and 7 cents, and some way speculators make money on some of them. So,
Well, it's the way the formulas are. I mean, the accessibility of those stocks are a lot different in Australia than they are here
yeah,
in
I
North
mean, there's
America,
lots of
obviously.
differences, but I don't think that model works in the U.S.
I don't think so either,
or
but it
and I
works for
said the
them.
U.S. and Canada, but let's be honest about it, my friend. The Toronto Venture Exchange is really driven by American speculators. And that's when we see the run up, when the generalist American speculator go piling into all these penny crapper junior stocks.
Yeah. Well, we have seen, it's in the last couple of years since you've been gone, Mick. I mean, we have seen a lot of, well done explorers and developers being listed on the New York Stock Exchange, going off
True.
those OTC, going to the New York Stock Exchange. And there's some growing pains in there. It takes like a couple months for that liquidity to kind of pick up. But some of the companies that I invest in and know really well, like, I mean, they're getting most of their liquidity, or a lot of it, from the NYSC. And so that's a positive sign.
I agree wholeheartedly. And the ability of Toronto juniors that start on the venture exchange to get a big board listing on the New York American Exchange is the way of the future. I think. I really think the Toronto Venture Exchange is a failed business model, and it's not going to prosper sector wide ever again. Or if it does, get the hell out real quick. Take your money and run.
what changes do you think the TSX needs to implement to have a shot?
Well, we've been saying this for 10 years now. Get rid of the zombie miners. Arguably 60 to 70% of these companies uh, don't have a legitimate play that has any chance of succeeding. And they keep the doors open to pay overhead and live their West Van style lifestyles. Their lifestyle companies, what I call mining the stock market. And you're right. Every once in a while, I go back and I read things I wrote in 2008. One of the first newsletters I wrote was called Mining the Stock Market. So, this has been going on a long time.
Yeah.
But I really find it encouraging, of my portfolio, and it's really shrunk. A lot of the juniors I still hold don't have a prayer, but I just sell them so I can take tax losses to mitigate profits. An increasing number have New York Stock Exchange, the American sector of that, or NASDAQ listings now. So I would guess that about 1/3 of my holdings now, maybe more, maybe, 30 to 40, 35 to 40% of my holdings now have, in terms of number of stocks and in terms of equity value, it's well above that. So, and most of those companies have graduated. They started out as venture exchange companies. They went to the TSX big board. Then pretty soon they get a dual listing, and the smart ones then relocate to the U.S. as headquarters and have solely a U.S. listing, because they have mainly American projects and American investors
now. Let's move forward and talk about kind of your expectations about this market moving forward, what you kind of see on the future. But before we kind of get there, Mickey, let's have some more fun.
Okay.
You've been gone for 2.5 years. Like, I don't know what the hell you've been doing, man. Maybe you've missed some news.
I miss a lot of stuff. I can't tell you who merged with who.
Oh, all right. Well, so I have a number of big headlines here, just to bring you up to speed, that you should know as you
I probably don't know.
partake in Mercenary Geologist 2.0. Okay. Well, I'm sure you did know this because you probably have some thoughts, but we lost the Calibre Panama mine. That shut down. So,
well, I see the headlines about that, and I actually thought the last one I saw, the Panamanian government had said, okay, well, we're going to let it reopen, but maybe I'm wrong.
Yeah, I have seen speculation.
Back and forth. Is it a final decision? It'll never.
I don't know. I'd have to do some homework, but
so let me tell you, I've known that project. I can't remember what it used to be called. It was not Cobre Panama, but I've known of that project for 30 years. And the problem is subeconomic. It's not going to make money. It's going to lose its capital investment if it can even operate on an operation. Now, at $5 copper, it probably will make money on an operational basis, but company, nah.
All right. Another headline. Filo del Sol got bought by Lundin Mining and BHP for $4.5 billion Canadian. Obviously, huge news. Rio Tinto in the lithium space bought Arcadium Lithium for $6.7 billion US, Mickey. I know how much you love lithium. You're just.
And where's that lithium project?
I believe it's Australia, maybe. I'd have to double check.
So it's a pegmatite project then. I'm not.
All right.
I'm not happy with it. So that Rio Tinto got shut out in Serbia too on the big lithium play.
Yeah,
there.
They did.
And that was a brine play. That was probably a good play.
Yep. In the gold space, Newmont bought out Newcrest Mining for $16.8 billion. Really rough some feathers. Since then, Newmont offloaded a few of their non-essential projects to some serial miners. Tony McCooch for one of them. I know you think you know Tony pretty well, so that was big news. So use this as you will as you set forth. And then the other one, I actually kind of want to get your thoughts here because it is important historically for the United States industrial complex. You probably have some thoughts on this. Nippon Steel acquiring
Mm.
U.S. Steel for about $15 billion. There's a caveat in there. The U.S. government has the golden share on this thing now, but that's going through. What are your thoughts on this Nippon Steel U.S. Steel deal? If you
Well, Trump's a deal maker, and I figured that a deal would be made. And I haven't looked into the details of the deal, but I'm sure there's tariff issues involved, and the U.S. going to come out on top of that. It's going to be a good deal, and there's a bunch of steel workers going to either go back to work or continue to have jobs.
Yeah, those workers needed the jobs because without this deal of some sort, it sounded like they weren't going to have them. So it's positive for those individuals.
Yeah.
Yeah. All right. So moving forward, let's talk about what you see in the cycle. As we kind of enter into the second half of 2025 here, Mickey, and you kind of mentioned it before that this maybe feels a little bit different, but what are you seeing as far as this metals cycle? Because I opened up my commodities screen yesterday, Mickey, the first time in I don't know when everything was green, everything, energy, metals, agriculture. There wasn't any red on my screen at all. So, are we entering a commodity boom?
Well, that's a little hard to determine. Certainly, we're in a metals boom. Copper is, I don't know what the all-time high is, copper 545 or something. And we're essentially, hopefully it continues, but inflation is under control now. Back, not quite back from when Trump left office at 1.4% or what, but we don't have rampant inflation anymore. So bullish on copper because of demand. Gold's had a nice run up. I don't know where it's going to go from here, but if you hold gold, man, you got to be happy. Your net worth is basically increased in double digits just with the run up in price of gold. Inflation be damned on that too. Oil is trading less than $70, even Brent. I think WTI might be 66, $67. And that's what drives inflation, really the price of gold. I don't know what's going to happen to the energy complex. We got to make sure that the price of oil is high enough that we're going to continue to produce at near record levels in the U.S. Uranium is up, 25% this year, but it's still not where it was at $100. So I guess what I'm saying, there's in certain commodities, there's certainly reason to think that there will be run-ups in price. It's not it's not a complete sector-wide commodities run-up at this point.
Yeah. Platinum. It's been a
Oh,
huge winner. Platinum palladium, PGMs.
explain to me what's going on with platinum, which has been in the doldrums. The platinum to gold ratio is gone up. I'm looking at my board right now. Bear with me. Platinum to gold is at 0.4, and so we haven't seen that level for about a year now. So
Yeah.
still got a long ways to run. Historic platinum to gold ratio is well over 1. So I don't know what's going on with platinum.
I be honest with you, I think it's just more of a 13-year bear market that finally found
Yeah.
its way to bust through. And I don't.
So palladium made the big jump because the price of platinum was historically it's 2.4 platinum to palladium ratio, and we just now over the last few months gotten above 1 again. And so what automakers did it's real easy to change from platinum to palladium and catalytic converters. And now, since the price of platinum was depressed for so long, then they switched back to platinum. So some of it could just be catalytic converter demand. There's other things that could be going on. South Africa and Russia produce what 85% of the world's platinum, those two countries. So US is having difficulties in both with both those foreign countries. So that might have something to do with it too.
Yeah.
Pure speculation there.
Back when you and I were working together every week, kind of the height of COVID. Um, I mean, you and I had some great conversations back in those days. What a mess that we were in, and you and I were hashing things out side by side for a long time. I remember those conversations very fondly. But one of the things that those years really opened up was really how fragile supply chains were in the U.S. I think a lot of people have came to understand this, but on the back of it, especially on the metal side, it seems like everybody's a little bit more familiar with the need for these critical minerals, the rare earths, or whatever, however, whichever side angle you want to play this thing. But I was just curious, since then, Mickey, you've never really been much of a critical metals or rare earth guy. That's never really fit your speculation thesis. But I'm just kind of curious if that has tweaked at all since then, as there continues to be a push. We continue to talk about U.S. dominance and being able to supply those metals for our own supply chains, whether it's production in the U.S. or through our friends, but at least untangling the shackles with China. Do you have any? Has this kind of opened up any sort of ideas for you, and are you looking that way at all, or
Well,
general thoughts?
so I'm going to tell you a bit about my history that was before you and I, long before you and I knew each other.
Mm.
We made our fortunes in the rare earth business in 2009, 2010 by picking three of the four eventual New York Stock Exchange listed companies. Or actually, I was a private placement investor and a founding shareholder of one of them, of three of them, and I actually covered the four. So I actually, in my newsletter, I covered the four that eventually got New York listings. So I have been, and if you look at my writings in that period, from say 2009 to 2015, 16, probably about half of my general newsletters, my commodities newsletters, were about rare earths and critical minerals. So, what I think about it now is, well, define a critical mineral. Copper is a critical mineral. And I have a piece, I spoke about it, talked about it, wrote about it, that the real critical minerals were oil and gas, uranium, copper, iron, cement, things that we depend on to function as a society. So I actually broke down the periodic table and picked out what I considered the critical minerals versus the specialty metals. And most of what they talk about now is specialty metals. We have enough rare earths in this country. We have enough rare earth deposits. Where we're lacking is the magnet to final product, usable product. That's where the Chinese still dominate. So that's going to change. We could supply all our rare earth mineral needs with approvals, with energy fuels, with new technology. We can build that out. So in very few years, with a proper regulatory environment. So I'm not all this hype, about how rare earth minerals in Ukraine. That's just so much fluff. They got a few deposits, but they don't produce rare earth minerals. We got a few deposits in the US that don't produce. There are a few deposits in Canada. So the scarcity of rare earth minerals, and it's all the time conflated with rare metals, rare earth materials, all this stuff. So what you see in the mainstream media is just neither here nor there, really. So,
but is this narrative fitting with your thesis or how you're allocating any of your capital?
no, I'm really done with the whole. We made our fortunes. I can go through a couple of examples. We financed one rare earth company, started out with a founder's share of financing at 10 cents. It reached $6.35 on the New York American Exchange. Another one, we did a private placement early on at 22 cents. It went to just below $10 on the American Stock Exchange. So, that money was made. I hung on too long on most of those stocks. Should have taken more profits, but I think I'm done with that sector pretty much. Now, that said, I still own Energy Fuels, which I owned Energy Fuels as a uranium play, and it was took over a uranium explorer that I held. So, I'm
I have a
still
little bit more.
involved. Now they're rare earths. They're partially a rare earth mine to market sort of rare earth company, and that makes sense because they got the mill in Lisbon Valley of Utah. They got the only mill in the U.S. that's permitted and fully capable of producing uranium and vanadium and the various rare earth minerals.
Yeah, that mine in Arizona, the uranium mine in Arizona, they had news
Well,
about
that's a
that this
good
week.
one.
Yeah,
So,
looked pretty good.
yeah,
I
so
also own Energy Fuels just to.
yeah, so I visited not that mine, but what was it called? The Pinon Ridge, or
Mhm.
that's not no, that's not it. Well, the one on
Yes.
the Utah sign that was shut down, Pinon Ridge, that's the mill that never got permitted in Colorado, now owned by Western Uranium and Vanadium. But whatever the mine was called, I was underground at the high grade uranium mine probably in 2015 or 2016, and they were in permitting difficulties on the deposit they had discovered in Arizona, and now it's in production. And they're wonderful mines. They're tiny little things with extremely high grade uranium and or copper.
Mm.
So that'll be a good mine.
So maybe we'll wrap it up here, Mickey. But what are you looking for, like going forward now that you're back, and now that you're back and writing again? What kind of criteria needs to be met
Well,
for
I'm looking
mercenary
for the
geologist?
same old thing. We're looking to make money. And I'm looking to make a few more people millionaires with my stock picks. Back in the day, in the heydays of the late 20 aughts to early 2010s, I go to these conferences and people would come up and thank me for making them a millionaire. Well, I didn't really make them a millionaire. I just gave them some ideas and they acted on it. And hopefully took profits before those profits oftentimes go away. So we're looking for the same, looking for opportunities. I've done a couple of private placements in a junior in Mexico that's going to do really well. I'm hoping that well, there's a chance that warrants will be called in early on the secondary financing, and so I've participated in those. There's copper under opportunity I'm looking at in private placement now, and then again, I'm still taking money out of the market. All in all, sold some copper stocks that had big run ups, and where I get 2 to 5 baggers sort of stuff, that's the time to take your money and go find something else. So I'm looking, if people have ideas, send me a note.
There you go. Just Mercenary Geologist.com. Mickey, like, some things have changed in this market, but I guarantee you that you have not, and that's the way it should be.
Well, I changed my appearance. Last time you probably saw me, I had a good old hillbilly redneck beard down to my breastbones. So
yeah, I remember you had that goatee. You had some facial hair. So
well,
I got more tattoos. That's how I went and changed.
Yeah, I got my tattoos, and the last tattoo I got, I think, was about more than 15 years ago. So,
well, I think mine was 15 days ago. How about that?
How about that, man? Nothing
really
wrong with body art as long as you can cover it up when you need to.
Yeah, absolutely.
And I notice I don't see neck tattoos on you, so
no neck tattoos, nothing on my hands. I'm not there yet. Still got plenty else to cover. All right, my friend.
Take the metal out of you. I used to do talks to geologists, and I go, you go for an interview, put on a suit, take the metal out of your face, and cover up your tattoos if you want to get a job. As a geologist.
All right. Yeah. Mickey, so good to see you. Thanks for your time. And we're in a better place with you back in this market. So thanks so much, man.
All right. Hope to see you soon, Trevor. Thanks for the opportunity.